Good evening. Today we're going to be presenting on wealth management and crypto. Lightbox has been looking into the space for the past few months, and we would like to share some of our insights on the space as well as some of the companies that we've looked at. And over this presentation, we'll be doing exactly that. Some of the takeaways that we've gotten from looking into the space is that we're seeing an exponential increase in the number of crypto investors as well as cryptocurrencies, which is 3 times higher than 2017, with newer protocols and assets being built every day. The adoption of crypto in India also has rapidly grown, as we are ranked second in adoption globally by Chain Analysis in 2021. India added approximately 20 million users that interacted with cryptocurrencies versus the 24 million new demat accounts that were registered. This is a clear indicator that users are considering crypto to be a strong asset class. With the average user still not knowing what crypto to invest in or how to generate yield on their holdings, we are seeing the rise of wealth management platforms like Mudrex and Coinzack that allow investing in curated or personalized baskets of cryptocurrencies, as well as platforms such as Pillow and Flint that allow you to generate yield via decentralized finance strategies for the users holding crypto. We believe that crypto will continue to remain a complex asset class for the average retail investor, which will create various opportunities for wealth management services to build platforms that allow users to invest, earn, and diversify within the space. Now we're going to begin with where crypto is. After gold, debt, and equities, we can now say that crypto has become an asset class in India, with increasing number of users adopting it. As we mentioned earlier, India is ranked second in crypto adoption in the world based on on-chain retail value transferred, as well as the on-chain volumes on cryptocurrency exchanges across users. We have approximately 7.3% of India's population holding or trading cryptocurrency, and the combined daily trading volume in 2021 across all exchanges is anywhere between $130 million and $190 million. As of January 2022, Indians hold over 5 billion in cryptocurrencies. So now what we want to understand is what these new startups are actually doing. So some of the startups that we looked into was Stader, which is essentially a staking platform that allows users to stake their proof of stake assets with the power of an auto compounding feature over time. We have Pillow that allows you to earn yield on your holdings in Bitcoin and Ethereum and stable coins via DeFi strategies, some of the strategies that include liquidity providing. And Flint, which again leverages DeFi to earn yield in stable coins through institutional lending as well as DeFi. And last but not least, we have Mudrex, which allows users to invest in customized and curated crypto baskets that allows people to diversify across assets within the space. Now, why is this needed? The methods of generating yield across fiat and cryptocurrencies for users are sort of different. In fiat, we have fixed deposits, debt, stocks, which you can directly invest in. Similarly, in the DeFi space in crypto, we have methods such as staking, borrowing and lending, peer-to-peer, and liquidity providing that allows users to earn yield on their assets. But with crypto being so early, there remains an enormous opportunity for startups to provide these services. Today, to generate yield on your holdings, the lack of knowledge, the poor user experience, unable to dedicate so much time because crypto is a 24/7 globally traded asset, the security risk and the complicated strategies alongside the high volatility make it difficult for users to interact with these platforms, which is why we need wealth management services in this space. They have the knowledge and easy to interact with user interface. They have dedicated research teams that ensure security and insurance of your assets, and they are able to constantly monitor your portfolio while diversifying across strategies to help you earn yield. And now we know that not everyone has the time or the knowledge to generate yield, even in fiat as well as crypto. Hence, we've seen startups in the traditional finance side of things as well as crypto. In traditional finance, you have a small case, you have your Kotak mutual fund, you have Grip, Lendbox that help you get exposure to traditional finance, equities, and debt. Similarly, in the crypto space, we are seeing a rise of startups that allow you easy access to these various strategies in DeFi, such as investing in basket of coins, staking, borrowing and lending peer-to-peer, as well as providing liquidity. But to understand first, we need to get to the crux. What is actually decentralized finance? Decentralized finance is a finance system that is open to everyone, that operates without any intermediaries using blockchain technology. And some of the key characteristics of DeFi that make it so attractive is that it's completely permissionless, pseudonymous, it's non-custodial, which means the assets are not controlled by any third party, but by the user themselves. And these platforms are completely transparent and governed by the users themselves. Whereas in a centralized financial system, we have various banks that interact with each other until the funds reach the end user. Whereas over here, it's completely peer to peer. But just like traditional finance, DeFi consists of 7 different types of services that allow users to perform these various activities we see in traditional finance, which have decentralized exchanges, access to credit, stable coins, which is the equivalent of owning fiat. You can get insurance. You have decentralized asset management companies, protocols. You have derivatives trading platforms, as well as wallets that help you hold and trade your crypto assets. However, today we're going to be focusing on how to generate yield through DeFi protocols. One of the few ways is staking, which is earns you a yearly interest of anywhere between 2% to 10%, extremely secure but low risk as well. Then you have peer-to-peer borrowing and lending, where in which you can earn anywhere between 6 and 15%, which is unsecured but over collateralized, and the risk for there is in between. But the highest risk obviously yields the highest return. In this case, liquidity providing, which is unsecured as you're interacting with smart contract platforms that give you a yearly interest anywhere from 10% to 1,000%.